All right, what's going on, boys? We got a market recap today for Tuesday, May 19th. Um, a lot to get into psychology-wise. As you can tell, on Top Step X again because your boy blew his Lucid accounts. So, like I said, a lot to go over psychology-wise. You can see the two Lucids that I had from yesterday. The way that I trade evals, essentially risking the whole drawdown, trying to half pass them in 2 days, which is very, very aggressive. But these two got blown, which isn't the end of the world, but like, I just need to realize where I'm at right now with my mental, and so that I can keep this snowball, this positive snowball rolling. Because these prop firms are ultimately designed to make you emotional, and they're designed to take good profitable traders and break them down emotionally by the way that these rules are set. Because even after months of profitable trading on an XFA, and making good money doing so on once, like, even months out of great performance, you then have to get it then gets you then have to face this potential psychological battle with these evals. And personally, well, I took a dumb trade this morning, something that really shouldn't have been taking, all for the sake of trying to pass those Lucid accounts today. So I think it's important to realize that, what I'm doing and how I'm feeling, because even though they're evals, it's nothing to. I made a TikTok about this yesterday. Even though they're evals, it's nothing to just shrug off, right? I think it's really important that I need to hunker down and maintain these good habits and be honest and real with myself. It'd be easy for me to just say, oh, it's an eval, it doesn't matter. But I need to be honest with myself, and stick to taking good trades and not let bad habits form just because I'm on an eval. So with that being said, I did end up taking in my eyes, like a textbook short for me to have passed these top step evals. So I have 3 accounts, risking $2,000 drawdown to make $1,500 essentially. So we'll go over that trade, but first of all, I want to go over my bias, why I took something dumb, and why it was a dumb trade for the Lucid evals, and then get into this textbooks trade that, in all honesty, needs to be what I wait for, regardless of if I'm on an eval or an XFA, because this is textbook and what I want to see for myself. So, getting into my bias this morning. This is what we looked like coming into the market open, holding this 1 hour gap. We had a clear drawn liquidity down to this daily sell side liquidity, and it was also the beginning of a weekly fair value gap that was opened up. So shorts to that drawn liquidity is my main target. I want to see closes below the dashed line to confirm it. Below these internal lows, I want to see closes, which we eventually got with this winning trade that I had, to confirm the move lower, because we were kind of in this pre-market range, kind of wicking out these internal lows, because we've already swept the internal lows. However, I said, if it's just a sweep lower and we displace through the 1 hour CIBI, we could potentially target the buy side above. So market opens here, we wick out these lows again, and then pump up higher. Now, these were the longs that I took, looking for this hourly buy side liquidity to get taken. And why they're invalid is because, look at this. I opened the charts and it's the most clear bearish bias of all time. We are trending down on the 4 hour, on the 1 hour, We have a incredible drawn liquidity right here. And we have this 1 hour gap, this bearish gap that's holding price. So what do I need to see in order to target higher? I would need to see this 1 hour gap get ran through to even think about targeting these highs up here because of the higher time frame context of the market. And so you can see the hourly candle is just a big wick into this 1 hour gap. It holds the 1 hour gap, and then we continue lower to my original target. So I need to keep that in mind. Like if I'm going against, and I know this, right? I'm taking a long here knowing that it's just an eval trade, not something that I would take on a normal funded account. And my cope for it is, oh, this is an eval. I'm just looking to literally catch a negative RR trade to have past this. And it's just me being impatient. That's what it is. It's just me being impatient. Because in order to target these highs, we need to close above this hourly gap. You can see if we had gotten a strong 15-minute candle close, like maybe because it's the next time frame down from the hourly chart, but 5-minute closes higher, and this isn't even like a a very, very strong 5-minute candle close. It's just me trying to cope and me just trying to find a trade as soon as possible to pass these accounts. And that's where the mindset shift happens. It's no longer, okay, what is everything wrong with this picture? Like when I'm trading the best to my abilities, it's like me trying to find a reason not to take a trade. When I'm on an eval trying to half pass them really, really quick, it's okay, what's any possible reason to get into this trade? And it's a complete 180 in terms of mindset. So yeah, that's why longs were invalid here, because this 5-minute chart doesn't mean anything because of the higher time frames. Like I said, maybe if this 15-minute candle closed all the way up here, like a full 15-minute candle, then I'm like, okay, maybe we're just going to come take this buy side liquidity. Because think about it, if we have a 15-minute gap here, a 15-minute bearish gap, and we come up on the 1-minute time frame and close the 1-minute candles kind of above the 15-minute gap, that doesn't mean we're not going to hold it. It's this exact same thing. So 1 hour gap never got invalidated, therefore longs are not valid. Like I said, if this hourly candle comes up and closes up here, then it's like, okay, longs are then valid. But as you can see, the original bias that I wanted to see play out literally happened, which is what this winning trade was. Coming down, we then ran through this 5-minute gap and closed this 5-minute candle. You can see all these dashed lines that I have drawn out here. We closed below these internal lows, confirming the move lower towards that sell side liquidity. Once the 5-minute candle closes down here, in order to get a decent fill, I then place a limit order to where I was content with the risk to reward. Personally, I had my stop loss all the way above this 5-minute candle up here. And then to ensure that I got filled, I had my, let's see, I got filled like all the way down here for about a 0.8, because literally the way that I'm trading these evals is I'm risking the full 2,000 drawdown for to make $1,500. So it's literally a 0.75 RR. Had this been a so this is where essentially where I got filled, then I had to hold it a little bit past this weekly gap, and I placed my limit order a little bit lower just to ensure that I got filled on this trade, because I had a lot of confidence in it. Had this been a on an XFA, the only difference is I may not have honestly gotten filled. because usually if I'm going to place a limit order. However, there was another 1 hour swing low down here that I had marked out to potentially hold through. So in all honesty, I'm not sure exactly what I would have done had I been on an XFA, but with the safe stop loss, the lowest I could put it was above that 5-minute candle body. And so a limit order here would have been a 1-to-1 had I had my trading tool all the way down to that lower 1 hour low. A 1.2 R would have been right there, and it would have gotten filled. In all honesty, I don't know what I would have done, where exactly my limit order would have been had I been on an XFA, but somewhere in this general area, and likely would have gotten filled. So that's the textbook trade when I have a strong draw on liquidity and it's confirmed in my eyes. A confirmed strong high time frame draw on liquidity. It's confirmed on the 15-minute candle closes. We're displacing towards it, and it's in my eyes, it's confirmed that we're going to it, and then a safe stop loss. That's all I need. So yeah, these longs aren't confirmed because of the 1 hour gap and the bearish overall higher time frame structure. These shorts, you can be much more aggressive with your entry in terms of being short once we have this candle close below the internal lows, because it's going with the higher time frame structure, and we've already at this point invalidated longs, because if we wanted to go higher, we would have done so right here. We then displaced lower below these internal lows, confirming the high time frame draw on liquidity lower, and that's that. So that's my day trading these evals. I'm honestly sick and tired of I'm already sick and tired of being on them, because I realize it makes me a little bit more emotional, because I realize the fact that I can't actually make money from these accounts. I just want to get off them and get to that Express funded account. But I have to. The thing that I have to do is I need to be honest with myself, and I have to only take the same quality A+ trades on an eval, no matter. It doesn't matter. It does not matter. The habits that I'm building, good habits, are so much more important than passing an eval in 2 days, right? Even if it takes me over a week, even if it takes me 2 weeks, let's say take one trade a week, I would much rather do that, because then in 2 weeks time I will still have these Express funded accounts, right? It's just ultimately it just comes down to me being greedy, and I need to realize that, and I need to avoid it in the future. And I hope this can help you in some sort of way, because I know it's not just me who deals with this. Because like I said, these prop firms are designed to get you wired this way, and to get you thinking this way, and to stop thinking about the main thing when I came into the morning was, how can I pass this eval? It wasn't, okay, the only thing that matters is following my rules today. So yeah, man, that's what I took. That's what happened with me today. Unfortunate. Got to realize that prop firms are an ROI game, which is why I'm risking heavy on these. But like, I've got to maintain these good habits, and I've got to still be disciplined, even trading evals. And in all honesty, if I'm trading the full drawdown, if I'm risking the full drawdown on these accounts, I'm risking 2,000, like the whole account, to make 1,500 each day. Then they have to be A+ trades. Why would I force something if it's not A+? So I'm gonna literally be risking the whole drawdown on the account. It just makes no sense, and like I said, it's a part of me just wanting to get off these accounts, but need to maintain those good habits, because ultimately it doesn't matter if I pass these evals really quickly if all it does is build bad habits, and then leads to me blowing the Express funded accounts because I built bad habits. And it can be so easy in trading to slip up. So gotta make the main thing just maintaining. The only thing that should change when trading these evals for me is just the dollar amount that's being risked. That's the only thing that needs to change. So that's my goal. The rest of this week is to just trade. Just not even think about the account. Just trade good trades, and time will do the rest. So, um, yeah. Honestly, feels good to be back on Top Step X. I don't even know why I bought the Tradeify accounts on Lucid. If you're gonna buy Lucid accounts, I would suggest to use Tradeify because it's pretty similar to the Top Step X platform. I honestly don't know why I bought the Tradeivate accounts because I'm not comfortable trading on Tradeivate. Partly because I don't have much experience trading on it, but yeah, if you're gonna buy Lucid accounts, I would highly suggest using the Tradeify, not the Tradeivate Ninja Trader. That's just my personal thoughts. If you want to buy Lucid accounts, are still running the 50% off deal through July, I believe. It's only for 2 accounts. You get 2 accounts at 50% off. They are the best prices in the game. And yeah, man. So just gonna move on and hopefully, just following my rules, getting back to the basics. I know I said this yesterday, but literally, like, I have to make it a priority, no matter what account I'm trading, to just get back in that flow state. And the only thing that matters is the habits that I'm building. And yeah, yeah. So, and I know that in a week or so, there's going to be another A plus setup. So the goal is to not force anything in the next tomorrow or the next day if it's not there, and just be patient. Be patient, and focus on the habits. So that's the market recap for me. This is the valid trade from the morning. Was once we closed below these internal lows here, and confirm the drawn liquidity lower, because you can see we were looking out these internal hourly lows, and you can see the daily low right here. So I want to see, like, when we take a drawn liquidity, I need confirmation that we're going to move past it and continue to the next drawn liquidity. And what tells me we're going to do that? This 5-minute candle close below the internal lows. So that's a market recap from me. Appreciate you watching, man. If you want to join the free Discord, it'll be the first link in the description. And let me know if you guys took a trade or not. So appreciate you watching, and I will see y'all tomorrow in tomorrow's market recap. Staying disciplined and building good habits. All right. Peace, boys.